Hi guys, it's Thomas here from COTBase.com. Welcome to this week's Commitments of Traders review. Today we're going to have a look at the 34th report of this year, and as usual we're going to start off with the changes in commercials positions. We start off with the S&P 400, where we have a 16% change in commercials positions. You may see that change size over here. It's larger than average, but we have seen much greater changes in the past. And it's a bullish COT change signal coming after prices rise last week, the end of last week. So maybe the signal is a little bit late for us. So let's jump over to the 5-year chart and see how extreme this market is currently. And you may see that we're more or less in the same position as we were since early this year. We are closer to this bearish COT Extreme. No question about that. Of course, this is a good example that these extremes may be present in the market for many weeks, months before any reaction from price comes. Let's jump over to coffee, where we have a 13% change in commercials positions. Here we go. You may see that change over here. Commercials going back into net long territory. And you can see this change size being amongst the largest changes. We have seen much greater changes, but it's still definitely the size of it is greater than the average change size over here. Small speculators have changed their positions 28%, pretty large over there. So this is a bullish COT change signal, and we can state that commercials are net long together with small speculators, and only large speculators are pessimistic about the market currently. They're net short. Jumping to the 5-year chart, here we go. You can see that the last major extreme was a bullish COT Extreme. You can see how well price reacted to that, and then we reached this top over here where we had this jump back to this net long territory. That's exactly what we're experiencing right now. So a big question is whether this extreme is going to widen towards the bullish side of the market, or will it continue downwards. I mean, commercials decreasing their net long and increasing their net short positions. That's the question for the next couple of weeks. Our next market is the Kansas City wheat, with a 12% change in commercials positions. You may see that change over here. Again, a bit larger than average, but nothing too unusual. So let's jump right away to the 5-year chart and see the extreme. And here we have this bearish COT Extreme that you may see affected prices pretty hard. You can see that there was a decent rally, a very dynamic rally, and afterwards prices just dropped back towards the levels where they started off. So we are still not at those all-time bullish extreme levels, no question about that. This can be a relative one. So of course stress levels have not built up towards the bullish side of the market to a great extent yet, so you have to be careful over there. Jumping to large speculator COT Extreme, we've got the Dow on top of our list with an all-time COT Extreme, followed by sugar, similarly with all-time COT Extremes in commercials and large speculators. Let's start with the Dow. We talked about this market last week, and I told you to be cautious, because although we have that all-time bearish extreme, indexes do correlate significantly with each other, so you have to have a look at other indexes as well, the S&P, the Nasdaq, and the Russell as well, and we could not see anything that serious as we have in Dow. So you have to be cautious with this signal. This may grow to even greater extent before anything happens. You have to be careful with that. So let's jump over to the sugar market, and let's have a look at the 5-year chart. And there we go. Here we have this beautiful bullish COT Extreme, an all-time COT Extreme, something we haven't seen in the past. Coming after this very decent decline in the market that started off somewhere mid-2016, you may see that we had that beautiful bearish COT Extreme. It was actually a hard one. You may see we had that bearish extreme back over here. You might have thought that, okay, that's the end of this rally, but then another greater jump came in the price, and we reached this level, and now you can see how well prices fell afterwards. So we have this bullish COT Extreme. Commercials out at roughly net 100,000 contracts net long. Large speculators are roughly at 75, 80,000 contracts net short. So it's a beautiful bullish extreme, no question about that. And I think you may see prices have started to bounce off these levels, these support levels. So maybe this is a good time to consider a long trade in the market. And our last market for the review is Russell 2000 with 474 report extreme, both in commercials and large speculators. And you may see what I was just talking about at Dow, how different the picture can be. In Russell, we have this bullish COT Extreme, while in Dow we had that bearish one. So tricky, no question about that. So here we have a signal telling us prices may actually go even higher from here, which is quite interesting to see after such a rise in indexes. Okay, that is going to be all for this review. I hope you enjoyed it, and I hope to see you next week. Have a great weekend. Take care. Goodbye.